Hi, and welcome to another daily recap. Today, I'm going to recap day 109 and it's October 4th, 2024, Friday. To give you an overview of what happened today, I didn't get any trades on both EU as well as GU because today was filled with three high impact news. So, price was a bit consolidative and it took both the buy side liquidity as well as the sell side liquidity. And eventually, at 13:30, price moved in its direction. So, let's see what happened today and how we analyze the market and why I didn't get any trades today. Before going further, we need to first identify the fundamentals before proceeding into the session analysis. It is very crucial. So at 13:30, we had three red folder news, and all of them could cause an high impact in the forex market. NFP and unemployment rate, those are the high impact news. Jumping into the daily structure, the swing structure is bullish, the internal is also bullish, and the fractal is bearish, which means that the price is now starting to make the internal pullback. The price has reached the discount prices of the internal range, and it has also mitigated this daily demand, which means that the price can either respect this demand or it can either flip it or come to this extreme demand, and then it can start to make that lower high and then take out the weak internal high. So what I can do is um, like just follow the bearish order flow. Like price is deep inside the daily demand. So what I can expect is price can come down, take out the daily sell side liquidity, and then either it can push up to take out the weak internal high, or it can flip this demand and then go deeper and make a deeper internal pullback, or eventually take out the strong internal low. So that's a different story. But for now, let's focus on the current price action. Price 50 buy side liquidity and chalk bearish. Price is going deeper into the daily demand. Thus, I can look to follow this bearish momentum till the price takes out the daily sell side liquidity as this low failed to take out the daily high. And one more thing is that this low failed to take out this high. So this low probably would be taken out. So that's a very good concept. So this sell side liquidity can be taken out this day. And this is the 4-hour chart. The swing structure is bullish and the internal is bearish. Price has almost reached the extreme demand of this internal range, I mean the swing range. So anytime the price can make bullish IBOS and then it can go up and take out the weak swing high. But for now, let's zoom in and check what happened. Yeah, swing is bullish, internal is bearish. Price was heavily bearish after taking out the weak swing high. This bearish momentum can take out the strong swing low. Yeah, obviously, price almost made a failed reaction of the 4-hour demand. This is actually a failed reaction of the 4-hour demand. This could be an early sign that the price may continue bearish till the price takes out the strong swing high. Sorry, strong swing low. I mistake. Strong swing low. So this is my 4-hour target and this is my daily target. So both are bearish. So for longs, I would start looking for longs only when the price chalk bullish. So this is the chalk bullish area, as this would be the counter internal and counter fractal. So if I look for longs now without chalk bullish, I will be trading counter internal and counter fractal in the 4-hour time frame, which I don't want to trade. So for longs, I need to look for a chalk bullish, and for shorts, I can look for some kind of a bearish sweep zone or continuation of the bearish order flow and then take target the 4-hour sell side liquidity as well as the daily sell side liquidity. So the idea is very simple. So let's have a clear high time frame bias. Daily bias is bearish. Why? Failed break and low target time. Simple. 4-hour is also bearish. Why? Bearish order flow and target weak fractal low. Very simple. That's it. So why? So we got the high time frame bias that is bearish. So let's jump into the medium time frame, that is H1. The swing structure is bearish and internal is also bearish. So zooming in, you can see as per the high time frame, the price may come down to take out the weak internal low, which is also the 4-hour sell side liquidity. Thus, phase A2 for high probability today, though the price is in the daily 4-hour demand. Yeah, actually, one of the conditions for phase 2 is that price must not be in a higher time frame POI. But since the high time frame is heavily bearish and the bias is heavily bearish, this condition may be neglected because you're having a high time frame support. I can look to trade shorts after the price chalks bearish because price has already swept some buy side liquidity. So once the price makes the chalk bearish, that would be a clear confirmation that this is an institutional change in the structure. So once the price chalk bearish, I can look for POI somewhere here, and then I can look for shorts targeting the weak swing, weak internal low. So the game plan is very clear. And yeah, but the chalk bearish came only at 9:22. So at 9:22, uh, you know, this is the 9 a.m. candle. So I need to wait for the 9 a.m. candle to finish. That is 9 a.m. in the sense 9 to 10. So once this candle finish printing, London session will be done. So I need to wait for the New York to open. So which means I need to wait for this candle to finish printing and two more candles to finish printing, and then I can trade during the New York session. So there's a long waiting period of 3 hours now. I mean, 2.5 hours. And also one more thing is that the DXY as well as the GU has swept the Asian eye, whereas the London didn't sweep the Asian eye, but it made a chalk bearish, which means this is a bearish SMT divergence, which adds to the bearish idea of confluence. So here is my phase A2 trade. Price not reacting after my time frame POI. This box cannot be ticked because price is still in the 4-hour demand. In line with the medium time frame order flow, yes. And the medium time frame POI with a score of 4 by 8, let's check it. Must have fixed liquidity, yes. It has displacement, no, because this uh, there is no body closure below this chalk, so it does not have uh, displacement, and also there is no fair value gap. So I can't say this has a displacement. It has made shifting order flow, yes. Unmitigated, yes. It has an inducement, yes. This is a lower time frame demand, you can see, and above this is the liquidity. And it is formed during the kill zone, yes. And it has slipped an order block, yes. It has slipped an order block. So almost all the boxes are ticked. So this box can be ticked, and the high time frame supporting the medium time frame idea. Yes, I'm going to take shots, and high time frame is suggesting me to go for shots. As simple as that. So what are the other confluences? There is no opposing supply and demand zones as a time-based liquidity to target. What is a time-based liquidity? Previous day low. It has a sell side liquidity to target. We know that what is the sell side liquidity? The 4-hour sell side liquidity. We need to target that one. And we are having a positive SMT with DXY as well as GU. So then what are the risk factors then? It is price is rejecting off from this Asian low. Price did not close below this one. So there is a probability that the price uh, taking out the Asian low liquidity and pushing up to take out the Asian high liquidity. And also there is three red folder news at 13:30, which means even if I get tagged in and the price moves in my direction, there could be a huge wick taking out the Asian high and the price going again in my direction. So I need to manage my trade perfectly so that I don't get, you know, at least I'll be stopped out of break even. The Asian high has not yet taken. That's all. That's what I was telling in the first point. So these are the three risk factors and these are the confluences. So let's see which one plays out. And for entry, obviously that would be M15 lead, M15 LC1. So perfectly aligned, everything. So this kind of lead is very much preferred because it stays very near to the POI. Unlike you can see, I think in September month, uh, in the last week of September month, there was an LC1 entry where the lid was somewhere here and the POI was somewhere here. So that was not a high probability setup because once the price, I'll just tell you, it was something like this. The POI was here. Carefully. Yeah, the POI was right here and the lid was somewhere here. So it is not that this doesn't work, but actually on that day it actually worked. But the thing here is the the lid is nothing but a liquidity point, a buy side liquidity. Once the price takes out the buy side liquidity, it will obviously go to the sell side liquidity, right? But if the price takes out the buy side liquidity and continues going up, then which means that that liquidity is not enough for the price to push it down. So you know, taking these kind of trades uh, sounds low probability for me. So I prefer the lid to be very close to the POI, and sometimes the lid can be inside the POI itself. So that would be a very high probability condition for me. In this case, it's a good scenario, and I can consider this as a lid, but this is the extreme lid because these both consist of a low resistance liquidity. So this is the higher, the highest point, and price can take this lid and then it can push down. and but the trade idea actually failed because yeah, this is where I yeah, this is where I started. This is the start of the New York session. So after this candle finished printing, I placed my stop order here, but I didn't get tagged in. Again, I placed my stop order here. I didn't get tagged in. Placed my stop order here. By the time price took the London high and obviously invalidated the POI. I thought this would be end of the day, obviously because it was 12:30 and in 1 hour, that is just four candles left for the price to mean the news to hit and price to fluctuate. So I don't think I'll get any trading opportunities today. So I thought that was the end of my day. But let me show you. Actually, my trade idea actually worked and it worked well. Let me take the snap of this coin and paste it right there. Yeah. After price took the buy side liquidity here, yeah, this is what actually the price took it, the buy side liquidity. And once the price took the buy side liquidity, and yeah, it just went in the direction that I actually analyzed, and it took out the weak internal high for our sell side liquidity and the daily buy side liquidity. And we need to see some chalk bullish to play the pullback, but there is no chalk bullish during the session. So that was the end of the session, and I didn't get any trades today. So again, it's a good day, good trading day. I was patient. I analyzed the market in with multi dimensions, and I was patient, waiting for my setup to play out. But obviously, it didn't play out. And one more thing is that I could have incurred a loss. I could have incurred a loss if I was impatient and placed a trade during the lull period. But I was patient and I placed the trade only during the my trading my that kill zones, and they saved me from a potential loss. So yeah, patience and perfect analysis combined together just saved me a loss today, and also it gave me a psychological boost that yeah, analysis is correct. Like anytime a clean setup could happen if I continue to analyze the market perfectly like this. So once there is a clean setup, I could hit beautiful profit. So in a month, you can get at least 4 to 5 trades, just 4 to 5 trades. And the thing is that your strike rate must be very high. That in that 4 to 5 trades, at least three must be a winner. So that's how you end up in a net positive month. So with a 2.5 hour profit, obviously that would be a huge, huge profit. End up in it. Yeah. So that's it from EU. So let's jump into GU and see what happened on GU. Let's continue our analysis. So as I already told you in GU, again I didn't get any trades. At least in EU, there was a POI to deal with, but in GU there was no POIs. The price was just consolidating, and during the news, it just showed what it actually wanted to do. So uh, in the GU, the swing structure is bullish. Internal is also bullish. Price is in the deep discount of the internal range and tapped into the daily demand. So either the price can react up from this demand and make the next lower high, or the price can flip this demand and then make bearish eyeballs. But from according to the current price action, according when you see it immediately, you can sense that the bullish leg is very consolidative, whereas the bearish leg is very distributive. So you can sense that the price can come down to take out the strong internal low and make a bearish eyeballs. And then once the bearish eyeballs is done, we can look to start to follow the bearish ring structure, the internal structure. The price is in the daily demand, but I'm not interested in trading against the falling line, which means that I don't want to trust this daily demand and take longs trusting this daily demand. But this is a high probability demand where the price could make the next lower high. I need to look for lower time frame confirmations before taking any longs. Obviously, that's why we are doing a multi-time frame analysis. So in the 4 hour chart, the swing structure is bullish. The internal is also bullish, and the price has taken this sell side liquidity here. So once the sell side liquidity is taken, we can expect the price to move up to fill this large imbalance and make a deeper internal pullback. Obviously, mitigate this daily the 4 hour supply, and then the price can push down, or it can either flip this demand, flip this supply to make the run leg to take out the strong in the weak swing high. So swing structure is bullish, internal is bearish. Price mitigated the daily demand, mitigated the 4 hour demand with huge bearish momentum. Looking for shorts is medium probability as the price may form the lower high in this demand. So once the price forms this lower high, means this is what I was expecting. Looking for longs is also medium probability as I would be trading against a huge bearish momentum. So unlike EU, GU conditions, you know, with low probability conditions, and you must need sufficient confirmations before taking any trades, either longs or shorts, both. So what is the high time frame objective? Both neutral because daily demand mitigation, and but once the price mitigates the demand, what we can expect a bullish order flow, but huge bearish momentum. So it's kind of neutral. What about 4 hour time frame? The sales and liquidity has been taken out. Price mitigated the 4 hour demand, both, but no bullish stock. So that is a big concern. So both neutral. So what I can do if both are neutral, just stick to the medium time frame order flow. And if you have a clean setup, just take the trade. That's it. So this is what the H1 looks like. The swing structure is bullish. Internal is also bullish. And price is in the daily demand, which swept the sell side liquidity right here. So all I can look is price to chalk bullish after shipping some sell side liquidity. That would be enough for me to take longs and target some of the buy side liquidities here. And this is what actually happened at 13. I didn't make any mid session update because it was just one expensive move. There was no, if the price had taken the sell side liquidity right here and pushed up, so then I would have been interested in this fresh POI, and then I can look to trade longs up to, any of the fair value gaps. But since the price made one single consolidated move, and this was the lost small fractal pullback. So if the price moved down, which means stock bearish, then I could know that okay the momentum has shifted bearish, then I could go for shorts. But yeah, price actually chalked bearish, but that chalk bearish came only during the news. And once the price chalked bearish, price would have obviously consolidate for the rest of the day. So the price only chalk bearish to the news candle. This could be the end of the day, as I won't be getting any trading opportunities after this news candle. It's very, very obvious. So you can just leave the screen and save your screen time, so- and just enjoy the rest of the day with the family. I I did the same. I actually took this screenshot just now. It's October 5 today, and this is October 4 because I don't want to stick with this shot unnecessarily waiting for some opportunity because I know that I won't get any opportunity. So instead of looking at the screen, just go and have some fun with the family. So price stock bearish and there is no stock bullish and there is no trading opportunities. So that's it, guys. There is no trades today. So I had to sit in the sidelines for GU and I was focusing on EU because there was some clean setup and there was some POI with which I can deal with. But unfortunately, that POI failed and eventually price moved in my direction. If the POI if the POI didn't fail, then I could have got that news, the bearish momentum. But since the POI failed, I, I had to give up that bearish. So it is what it is. So see you on fresh week, guys. This is October 5, 5, 6. Yeah. See you on October 7. Until then, cheers, guys. Bye.